All right, my friends, time for a follow-up video on our SPY predictions. So if you caught our last video, about 3 days ago, we had a prediction coming into Powell and end of the week last week here, where we had made some predictions of the 2618 from our hidden Fibonacci system would be a grave over under along with a little bit of that 415 gap. So we did a video here about this being great over under. Best case scenario for support, we come back down to 1618, or worst case, whichever way you're playing there. But we would hold up here at the 2618 and then pressure up to 418.30 and continue to the 422. And we made that prediction video a few days back. 3 days, and this is just a follow-up video to see how we did. So next day coming through here, this is what we predicted was 415 and 2618, and then our target for the day was the teal 1618 weekly, right here where the deviation is. So you can see us hitting that target goal right at the end of the day, held the support we needed right here, popped up, gave us a couple cool volatile intraday moves, but overall using the indicator systems that we provide here, very easy read. And then we said coming into Powell Friday, we'd push into that 422 and our 421 gap. And that's where we made it to. Unfortunately, it did run a little bit into the pre-market, and then we actually went short out of the gate here and said it was going to dump back down pretty easily here. There's a lot of stuff that was overextended, but from our prediction video moving back up, we were pretty accurate. So thank goodness for that. So we do have the 2618 support, just for the recap, moving forward all the way to the 1618 teal level on weekly to the 421. And if you trade futures with us, you caught a lot of that move into that unfilled gap, and it remains a weekly unfilled gap. So let's talk about the predictions moving forward real quick, right? So what are we going to see now? Well, if we go to the weekly chart, we're going to see right there that that gap is not filled, right? We have a big old no tag for price action. And what usually happens here, and if it's slow and controlled, and depending on how the catalyst leads up, we could get some topping action here. And we do have a lot of different resistance points here. We'll go over in a second on the default chart. But just for this example right here, the 1618 from our hidden Fibonacci system, we've been using this candle right here, January 30th, for months. And all we've been using is literally these Fibonacci points for intraday day trades. And we have a lot of explanations out of those in our courses and our live trading. So we've been highly accurate with those, even on the volatile days where there's giant wicks. Now, what happens next at the 1618 after a failed gap fill tick? Okay, well, 2K scenarios remain. Let's go back into the intraday here. So we have reinforcement of support and resistance at two different levels. Now, support is if it were to hold above the 1618 weekly, you would look for further upside to potentially hit the gap fill, then have some kind of range reaction. But in my opinion, right now, it's more or less under the deviations. You can notice a standard deviation +1. This is the weekly. And then +1 right here is the daily. So that is going to be our resistance points. So moving into the unfilled gap, I'm going to utilize a over-under level and or pocket of 418.30. 418.98, you can pretty much call that 419. And there's a pocket there. There's the hidden Fibonacci's 423 extension that we had, so that neon green level here, and then the 1618 Fibonacci from the weekly. I like to stack catalyst here as these build up, and we can create pockets like this of support and resistance. So moving into Monday here, this pocket is going to be a over-under, okay? Over-under with confirmation, right? That's how we use a lot of levels. If something is over and we are providing confirmation, we would go long. If under, obviously vice versa. That is what happened back on the 2618, just for an example of over-under support resistance. Here's the 2618. Notice the price action broke over, held support, held support, held support. We have a triple bottom right here of all support, right? And that is the back test of confirmation. And that confirmation sent us to our target for that trade day. So very easy to read there with our intraday indicator. So this is the new confirmation box for me. We have an unfilled gap, and Powell was a little hawkish there. Now, if you remember this Friday trade, we had Yellen come out with some regional bank worry too, saying more consolidation of banks were needed. And that was a super awkward comment, in my opinion, during this Powell speech, where Powell was a smidge hawkish here and then actually said some bullish stuff right at the end of that Yellen stuff. And then the regional bank panic took over and slammed us back down. And we had targets of 41.90 on the futures for a back test, and we shied that by about a point for our short target on Friday. So now moving forward, what's next? What's left? Well, just as we said, the over-under level in this pocket is all that matters. If we do happen to hold back up here and push towards that gap again, fail to the left resistance here or gap fill, great. That one, in my opinion, is a little less likely. I think it's a little more likely that we might need another catalyst and we might form sideways to drooping action here where we're going to fall down a little bit more. So I'm on the 30-30 chart, and I just want to stretch this down a smidge so you can see it. We'll go over the indicators in a second, but the standard deviation is what I want to bring into light here. Now, standard deviation center is right here, -1, -2 in the neon green, and vice versa. Above, this is the center line, is +1, and then 2 up, +2, okay? So this neon green level, this is way down here, -2, +2. The likelihood of the range of the 30-30 breaking outside of a deviation 2, whether it be plus or minus, is astronomically low to go past the green line, okay? Here's the long one. It shied it right here, fell horribly. Where did it fall to? Right to the green line. Again, -2. Very rarely are we going to see that continue through a 30-30 -2. Here's another example here. -2, neon green level. Okay, following. Now, those are extreme volatile situations. CPI, Powell, some kind of global catalyst. Very rarely do we even break out of the +1, -1. But when you see it at the plus or -2, start paying attention. So that was one of the biggest incantations that we were going to fail up here for us, or for me. Here's the +2. Okay? So what does that mean? Well, we could have some dirty consolidation, and depending on our channel we're going to call here, we could get some resistance. And this is what I mainly feel could happen. We could get a little bit of a relax. This relax could turn into consolidation. I could be wrong on the farther or the extent of the relax, but usually if it pops back up and stays under the 50 moving average, which is this red dash line, comes back down after a 100 EMA, which is the green level right here, hits, we're going to see the 50 chase down the 100 and start closing the distance between these moving averages. The price action can pop into that 50, and we could generate a pullback as low as the -1 on the standard deviation and 2618 back test. So if we do not go up and bump our head here, this is target 1. If it happens to go long for the fill, great. We could scalp it back up there for a higher high. Very least likely, not my favorite play. Play 2, which is a little bit more favorite, is we stay under the 423.6 neon green level, under the pocket we had just talked about, thus bringing us back down to the 30-30 +1 deviation for target 1 on the bottom side. It's going to come into here. And then if we go a little bit further than that, it's going to be close to the 2618. So I'm saying most likely we have a higher percent chance to even pop and drop or sideways drop into a further short, netting us, since we're futures traders, if you get short the box here, we find some good confirmation. Down to the standard deviation plus or minus calculation, you got about 20 points. And then down to the 2618, we got about 30. So that is the range breakdown we are going to play after our predictions have fulfilled from 3 days ago back here on Wednesday. Then we got the Thursday. Then we got Friday. So we were correct about that one. Now let's see if we can get the pullback back because of extensions up. This is just too high. Let's look at the indicators last but not least. Now, view my indicator video on how to use all 3 of these indicators individually. We have a video on the channel explaining RSI, MAC, and TTM, and I'm putting out a video that helps you use all 3 together. If you have not watched that, take that into consideration and peep at that real quick if this seems foreign to you. Now, all indicator hotness, right? Channels of RSIs. We are now in the 30-30 bottom channel, which means if the 30-30 decides to push back up on the SPY and reject around the 50 area here, that is where we see the trend continue down because we are in the bottom of the RSI channel. TTM has a bigger sell wave beat. MAC has crossed into the negative territory. Here's the 0 line, right? So we have a potential hit on the MAC, negative, positive, back and forth a little bit, and then back down to an extension somewhere back in here that we've seen before. You might not be able to see that one. Let me check OBS. My big fat head might be in the way of that one. No, it's there. Okay. So you might see some extensions as far as this. So some bigger moves down. Now we came from an over hot after hours, obvious resistance because RSI was already giving you lower highs, already feeling that bearish resistance up near that gap, dumped it from Yellen, Bank News, consolidation, and Powell. Now, The worst case scenario that we don't get the long to the gap fill up at the weekly, or we don't get the better trade short back down to a little bit of a relax, we go sideways, right? And it just does this junk for a little bit, even for Monday, then maybe, very slow, and then finally finds a way to break back up after the indicators reset. And I'll have an indicators reset video coming soon as well on how to watch for these resets. But now that the channels have changed, we are no longer in the top side of that RSI 3030 for an uptrend. We have broken to the bottom. So if it maintains in the bottom of that RSI channel, it is downtrend dominant. Now, anything can flip with news and catalyst and anything that comes out that changes fear, hype, and greed. But this is what we are looking at for now. So let's see how this next prediction video goes. We have our targets. Stay tuned for the next.